Welcome to the Deep Dive.
Great to be here.
So today we're taking a really close look at SoFi. We're focusing on a recent analysis that, well, it really unpacks their impressive growth story
Yeah.
and the specific forces driving it.
Yeah, exactly. And our mission in this deep dive is really to, pull out the most important nuggets from this source, things like the key numbers, the potential catalysts,
Right.
and help you understand what's actually going on under the hood with SoFi.
And right up front, this analysis points to something pretty striking.
Mm-hmm.
SoFi isn't just growing fast. They're doing it while becoming profitable.
Right.
And that combination is pretty rare, especially, when you're talking about a bank stock.
It really is that pairing of strong momentum and profitability. That's precisely what makes the points in this analysis so interesting, because sustaining rapid growth as you scale, that's hard enough.
Sure is.
And then adding consistent profitability on top of that, well, that marks a pretty significant strategic step.
Okay, so let's unpack the details this analysis lays out then. So looking at the numbers presented, the growth really jumps out at you.
It does.
For the first quarter of 2025, SoFi reported, around 10.9 million members?
That's right. 10.9 million.
And that's up a strong 34% compared to the year before.
Yeah, and they added something like 800,000 members in just those 3 months.
800,000 in a quarter. Wow.
Mm-hmm. And it's not just about adding heads, right? The analysis notes these members are holding nearly 16 million products.
Okay, so multiple products per member.
Exactly, which suggests, increasing engagement, a deeper relationship with the platform. It's not just signing up for one thing and leaving.
Right. And you see that reflected in the top line. The revenue grew by 33% year over year in that same quarter.
Mm-hmm.
What's really notable there, the analysis points out, is that's actually an acceleration.
Acceleration. Compared to what?
Compared to their overall growth rate from 2024. So maintaining, let alone accelerating, growth at this kind of scale, that's quite a feat.
It really is. And what's particularly fascinating here is how that rapid top-line growth is paired with the bottom-line performance.
Right, the profitability.
Exactly. The analysis points out SoFi achieved its first full year of positive EPS, earnings per share, a standard profitability measure, in 2024.
First full year, okay.
And now they're projecting EPS to nearly double in 2025.
Over, yeah.
And adjusted EBITDA, which is, a common way to look at core operating performance before certain expenses, that's also projected for solid growth.
So this isn't just a story of, burning cash to get users.
No.
It's showing the model can actually translate that acquisition into, meaningful financial results.
Precisely. The analysis frames this ability, combining strong growth and profitability as that rare edge we talked about earlier.
Okay, so they're growing, they're profitable now, but what about the future? What could drive things, even faster?
Right. That's the next big question.
Does the analysis identify specific potential catalysts?
It does, exactly. While, ongoing membership growth and expected double-digit growth in things like bank deposits are definitely part of the picture,
Sure.
The analysis highlights some areas with, let's say, exponential potential or accelerating momentum that's already visible.
Okay, now here's where it gets really interesting, I think.
Mm-hmm.
One area the analysis points to is the lending platform business. Apparently that's accelerating.
Yeah, that's a key one. And this isn't just SoFi lending its own money.
Right.
It's using its tech platform to originate loans for third parties or maybe referring customers elsewhere.
Oh, wow.
And the key strategic advantage highlighted here is that this model generates capital light fee income.
Capital light, so less risk for them.
Essentially, yeah. They're leveraging their infrastructure to facilitate lending without having to tie up huge amounts of their own capital on the balance sheet.
Got it.
And this is crucial because it allows them to generate revenue from lending without the capital constraints that often limit traditional banks as they grow.
Helps improve returns, manage risk. Makes sense.
Exactly.
And the analysis notes this platform is growing fast even now.
Right.
Even in this tough lending environment with high interest rates.
That's the point. It's already showing strength.
So the big catalyst it identifies is that if rates fall, which, many expect over the next few years,
right,
it could provide a significant tailwind for loan growth.
Yeah.
Across the board.
Yeah.
Both their own lending and this platform business.
Yeah. Connecting this to the bigger picture, lower rates could just unlock significant pent-up demand.
From consumers.
Consumers, potential partners. Yeah. Potentially boosting activity across their whole lending ecosystem.
Okay, what else? Another area the analysis calls out specifically is home loans.
Ah, yes, home loans.
It's currently a smaller piece of their total loan business, right?
Yeah.
The analysis says less than 10%.
That's right, relatively small now. But it's seen explosive growth.
Explosive.
Something like nearly 500% over the past 2 years,
Yeah.
as of early 2025, according to the source.
Wow. Okay. 500%.
And the analysis really emphasizes the sheer scale of the U.S. home loan market. I mean, it's the largest lending market by far.
Trillions, right?
Trillions, yeah. With Americans holding tons of home equity and all this pent-up demand because high rates have been limiting buying and refinancing.
Sure.
The analysis suggests this segment could see, well, exponential growth for SoFi in the coming years, especially as market conditions potentially shift.
Exponential growth potential in the absolute largest market.
Yeah.
Yeah, that certainly sounds like a powerful catalyst identified by the analysis.
Absolutely. And alongside these, there's another major lever the analysis points to, cross-selling.
Getting existing customers to buy more stuff.
Basically, yeah. It compares SoFi's average customer, who currently holds, less than 1.5 products, to large U.S. banks, where the average is typically 4 or more.
4 or more. That's a big difference.
Huge difference. So, getting an existing customer who already trusts SoFi with, say, a checking account, to also take out a personal loan or get an investment account or a credit card, that represents a huge, relatively untapped opportunity, according to this analysis.
Makes sense. Lower cost than finding a brand new customer.
Precisely. As they keep adding millions of new members, that growing base just becomes a more efficient funnel for selling additional products. This potential for increased revenue per customer through cross-selling could be a really significant driver of future growth without those same acquisition costs.
Okay, so that's the growth story,
Yeah.
the profitability angle, the potential accelerators. But where does SoFi stand right now, relative to its stated ambitions?
Yeah, the analysis gives some perspective on that. So with about $27 billion in customer deposits and $38 billion in total assets.
Okay.
SoFi currently ranks around the 60th largest bank in the U.S. That's based on Federal Reserve data.
60th. Okay. And the analysis reminds us that SoFi has publicly stated its ambition, its goal, is to become a top 10 financial institution.
That's the big goal they've put out there.
Top 10.
And to reach that goal, the analysis points out, would require roughly a 10x increase in size compared to where they are today. Yeah. Just for context, the analysis mentions Capital One, which is currently around the 9th largest. They have assets closer to $500 billion.
Wow. $500 billion versus SoFi's $38 billion. That's a massive leap.
It is. It's a huge jump. The analysis suggests that if SoFi can continue to execute on this growth strategy, keep those margins healthy, and significantly expand those asset-light fee income streams we talked about, then achieving scale closer to that of a top 10 institution could represent a massive success story.
So wrapping this up, what does this all mean for you, the listener? Based on the analysis we've explored today, the core takeaway seems to be that SoFi is showing strong growth members, revenue, and it's successfully translating that into profitability.
Yeah, that growth plus profitability combo is key.
And the analysis points to several specific areas that capital-light lending platform.
Right.
The potential boost from falling rates, the massive home loan market opportunity, and that significant cross-selling potential. Those are flagged as major engines that could accelerate future growth.
And understanding these specific factors, the ones driving both current performance and future potential, as highlighted in this analysis, well, it provides valuable insight into the strategic playbook of a company really trying to shake up the traditional financial landscape.
Definitely. And the analysis highlights SoFi's stated goal, becoming a top 10 financial institution, which, as we said, would require roughly 10 times its current size compared to banks like Capital One.
That massive gap.
Yeah, which raises an important question, something maybe to think about. What would actually need to happen for a company of SoFi's current scale to bridge that huge gap and achieve such massive expansion?
Good question.
And maybe just as important, what entirely different kinds of challenges might emerge at that kind of scale? Challenges that maybe aren't major hurdles for them right now.